Hey, what's up, you guys? Welcome back. In today's update, we're doing for Hedera. The price right now is 0.07685. 24-hour volume, we're down 22%. Market cap, we're down slightly at 0.12%. So heading over to the chart here, I've got it set for a day, and I'm just going to humor you guys because what can potentially happen here is a double top scenario breaking through this current uptrend. Now, this is very optimistic. I always like to venture outside the box just in case I want to make sure to secure any type of my investments. So as the prices retrace closer up here to the 787 price, we see that rejection coming down closer to the 20 MA, again, which is really good support number that we're seeing. And as the price is coming up, we see another rejection. So double top chart patterns again is signified by the M, and this is a bearish chart pattern, but we would have to see if we are going to come back to the neckline at the 707 and seeing from there the reaction based on the support number to see if it does break out. So that's kind of more, in the future to see if price does come back down here. But I did want to show you guys a few things on different time frames. So right here on the day, again, we can see the RSI is coming up at 88% and 59%. We can see that the D line itself, or sorry, the K line is very, very far from the actual K line itself. So we can anticipate price is going to continue up. However, we have to measure it up with our MACD, and it does look like the strength is pretty strong as the price is coming up. If we see another histogram and it is slightly bigger than this one, then we are most likely going to come back up and hopefully break through this area on our day. What I wanted to show you on a 4-hour time frame is a hidden divergence in a strong bullish way. So what I wanted to show you are these trend lines coming up, creating a lot of lower highs. That's going to work in our favor. Notice that we have an engulfing candlestick right here on August 6th, engulfing this candlestick coming down. We've got a doji candle as well. So we've got the bears and the bulls fighting each other as the price is retracing closer to resistance. However, when we take a look at this peak here on our RSI, we registered roughly around 53%, and we see the candlestick roughly around in the position here. Now, when we scroll over to here, we see the RSI was at 1.12%. However, it was higher in the chart. So this completely is the opposite that we see is coming up in our price, coming down on our RSI. And this is, in fact, a bullish hidden divergence of a continuation pattern. And we know that the continuation pattern itself, or the trend, is an uptrend ever since we broke through our 20 MA on August 4th. So price is still going to come up. We don't know how far it's going to go. It's probably going to try to come up to here at 0.0799 and probably retrace down. We got a couple of candlesticks right here that's already rejected down, coming even further at 61% of our fib. What we want to make sure is that we're always staying above the 20 MA if we want to surge through here. We can currently see our RSI is at 66 and 55%. So there is still wiggle room to actually come back up. However, we do see some weakness when it comes to our MACD line and the momentum on the bullish end. We're going to go into different time frames and take a look at what that looks like in terms of momentum. 3-hour time frame, we can see already we are crossed over on the bullish side. RSIs are retracing downwards. Zoom in on 2 hours. Already on the bear side, we can see, so price is going to come back down. We can see already here though, however, the K line is at 13% and the D line is at 37%, which possibly can have a good reversal at this. What we need to wait is for this pink line to come back down as seen in this area, this example. So we need to wait until it comes back down. What a strong reversal is if these two lines are seen below the 20%. 1-hour time frame again, considered to be oversold. However, we don't have a cross in between our lines. So this is actually a really good aspect of seeing different time frames. We can see this bounce back already from our trend line, which is really nice. We crossed over the 20 MA. Again, not too good, but we're only in the 1-hour time frame, and our MACD has already crossed over. So in 4 hours, taking all of that data, we can predict price is going to come back down. Now, we don't necessarily have to be within the same trend line to initiate the strength of the uptrend, we can break through this trend line and coming down to the 38%, what we saw in the last bounce from our 4 hours, or where we can see more strength in terms of support is the 50%, or again, the golden number. This is going to be the icebreaker that breaks the overall trend, because if you see price comes back down to 61%, we're creating a lower low compared to this peak here. The trend is lost. The uptrend is no longer, and we're down in a bear market. So what we are hoping is price only comes back down here and we hold support. And hopefully this bullish continuation or this hidden divergence is going to get us enough to come back and retrace our next level of resistance at 7.99 or at the 8 cents here. So that's my video for Hedera, you guys. I hope you enjoyed, and I'll see you next time.